In the country, we are the number 2 in the country for USDA loans as a whole.
And that's not something to sneeze at. Like the USDA loan, some people don't know about it in other markets, but it's functionally a 100% loan for people to buy a house as long as their income's under a certain level and their credit score is decent and the house is decent. It's a widely used tool in our area. You're listening to the Good for Business podcast, where we feature interviews, tips, and tricks from owners, operators, and innovators throughout Mississippi and around the world. And now, your host, Colin Krieger. Hey, welcome to the show. This week's guest is my very good buddy, Leslie Mackey, with Gumtree Mortgage. Welcome to the show.
Thank you. Thank you for having me.
She has no idea what to expect. She didn't know we were filming. She listens to me talk enough, so she's not going to listen to my GD podcast or GFB podcast. But generally what we have in here is I tell everybody to start by telling us your life story. Where did little baby Leslie grow up?
Ooh, I was actually born in Arkansas. Most people don't realize that. But we moved to West Point when I was 3. So, I mean, Arkansas doesn't really count, does it?
What did your folks do in West Point?
So, oddly enough, my grandfather served in the military for 20 plus years. And when he retired, he wanted his whole family to do something where they could be together. So he bought a bait farm in West Point. They raised minnows and worms and crickets for bait farmers. He had hundreds of acres of pond water that we grew up counting worms and seining fish.
You know, for years I used to, when people would talk about Mississippi, I'd be like, a bunch of worm farmers over there. So you definitely grew up in the worm farming business?
That was my very first job, was picking worms.
Really?
Yep.
I didn't know that was a job. It seems to me like there'd be some piece of complicated equipment that like scoops them up and separates them, and there's like gears whirring and whistling and buzzing and stuff. No?
There's your next invention that you can do.
I'll make tens and tens of dollars.
That's right, because it's kind of a thing of the past. So. And so he bought this bait farm so that because my mom has 3 brothers, and so her and her 3 brothers moved here to help, do this bait farm. Well, oddly enough, as the casinos got running, there was less and less people that were spending their money on fishing. They were going to the casinos, and seriously, the casinos shut down the bait farm.
Really? Mm-hmm. Well, you never understand. Like, you know me, I always ask about, like, what affects business, what gets you busy. We're going to get into that today in mortgage and real estate because, like, health insurance premiums are going up, which are going to incredibly hurt the real estate market. And people don't realize that. So, big bad casino destroyed worms. Man, see, that has never been said in a recorded podcast whatsoever.
Now we can make history
so
right here.
So what did y'all do with the incredibly rich soil? And was it a slow de-evolution of the worms and minnows, or is it happening over time?
It was a slow de-evolution, and then finally he sold out and then just stopped. But behind my grandparents' house, there are still probably 100 worm beds, but they're just empty right now. They just are about 12-foot tall cement beds, and it used to have worms, and they would go in there and we would pitchfork them over, like just flip the dirt and pick the worms, and then go to the next spot and flip the dirt.
So you don't
and pick
get
the worms.
Do you get the heebie-jeebies about bugs and worms and stuff?
No, I don't like crickets. I would never like a cricket. I would never touch the cricket. Yes, they reminded me too much of spiders, and they would jump on you when you put your hand down there to feed them or whatever. So I would never handle the crickets. But
we're going to dive deep into this. Show me on the doll where the cricket touched you. So the crickets traumatized you, but you didn't have to deal with crickets in your debate business?
Oh yeah, we had them and we raised them, but I personally would not deal with the crickets at all.
How do you get out of that? Are you the black sheep of the family because of that?
Sure, yeah. There's many other reasons why I'm the black sheep of the family.
We've only got an hour today, Leslie.
Okay.
We're gonna get that.
Dang it.
So you're worm farming, really?
Yep.
Well, this is a good feel-good story.
That's
here,
right.
We're going to get into the USDA a little bit later on.
Oh yeah, don't ruin the buzz.
So did you have a job outside of the family?
Yes. Now, my first real job outside the family was actually working in McDonald's.
Okay.
So in high school and outside
at one point, almost 20% of the country, that was their first job, was working at McDonald's.
Oh, really? I didn't know that statistic.
Back in the 70s, it was a huge number.
I'm not quite that old, but yes.
I'm sure. Assume you were born in the early 80s. Trying to give you some time here.
Thank you. I appreciate that. I'm not even going to, I'm just going to go along with that. Was it
McDonald's in West Point?
Yes.
Okay.
Yep.
The same place that it is now?
No, it was actually in a different location.
Yeah. Well, the one there is obviously
it's newer.
super modern and
yes.
amazing.
Yeah, oh no, the one I worked at still had the old-fashioned playground with the, the McDonald that you could get up in the hamburger and go
By the way,
around.
I'm in the market for any of that playground equipment from the clubhouse. I'm sure there's some laying around.
I'm sure there is. I'll keep my ears open for that.
Okay, so you're in West Point making milkshakes at McDonald's.
That's right.
The machines used to work.
They used to, but yeah, it's
Back
because
in the-
people are lazy now. They don't want to clean them.
Yeah. So what was the next job after that? Were you going to school or what were you doing?
Well, after that, I went to college. I went 2 years at ICC, and while I was in ICC, I worked in Tupelo at Red Lobster, waiting tables. So that was fun. Yeah. Everybody should wait tables in their life.
Yeah,
I firmly believe that.
My older daughter was making a fortune babysitting, pet sitting, and we made her work at Zachary's, which she loved. But I told her, I said, you need to go there to be toughen up, get in the weeds, be inappropriately hit on, get yelled at for no reason, learn some new curse words.
I agree.
And it helped her a ton. Of course, I did 20 years in food service, and
that's right.
I learned a lot of curse words.
Yeah, I bet. Yeah. Well, you still use some of those, don't you?
I know some of them, even some Greek, Greek cuss words. All right, what were you trying to study at ICC?
I wanted to become a dentist at one point. But yeah, then I worked a summer at an actual dentist office and realized that not everybody had as nice, clean mouths as I do. And so I quickly ran from that.
Pretty nasty. What was the next step for you, job-wise?
So the next thing that I actually did is I quit going to ICC after the 2 years and went to massage therapy school.
Really?
Don't tell anybody. I don't tell anybody.
You're literally on a podcast, and I'm in love with massages, but that might be a little different.
No, I actually owned a business here in Columbus for 10 years.
Really?
Mm-hmm. Leslie's Therapeutic Massage.
When did that shut down? I'm trying to think if I was here, because I like me some massages.
Let's see. I opened it in 97. That kind of goes against you saying that I was born in the early 80s, but we won't do all that math. And so, the end of 06. So, yeah, right at 10 years. Yeah, 2006.
It would have been here when I got here, but I don't think I got
I was in Court Square Towers. Downtown.
Never made it in there. I've only been in that building one time to see Colin Richardson, the realtor friend of ours.
Yes.
Rehab that building. That's the second time I've been in there. I went in there when it was like a first abandoned 7-8 years ago. So nice building. Glad she's doing some with it. I'm glad you're out of there.
Yes. Same.
So you're doing massages, which isn't a bad gig, but I imagine
it's not. Make good money, make good connections, and I loved doing it because I didn't do the frou-frou just rub oil on people. I liked to do more of the therapeutic fix a problem. Worked with several of the chiropractors in the area. Actually, the now late Dr. Som. Did you know David Som? Yeah, he was a very big advocate of mine and referred a lot of people to me. And so he and I worked very closely together.
Well, I let Justine at Maypop Spa every 2 or 3 weeks. I let her torture my feet. My feet don't hurt, but like when I go in there, I'm like break them. Like so she puts rocks between my toes and all kinds of stuff.
Oh, I may need her number.
Pretty rough. Yeah, no, she's awesome. She's tough.
That's awesome.
And okay, so you get out of the massage business?
I did. I got married, had kids, and I was blessed enough that my husband let me stay home and raise our children. So I have 2 children. I have a boy and a girl. The girl's actually older, so she would be mad if I called him out first. But I have a 16 and 15-year-old. And so, stayed home with them. And then when they got old enough to, do their thing, I decided to go back to work, and that's how I got into mortgages.
And how long have you been in the mortgage business?
5 years in January.
Yeah, so I met you almost right away because once again, I think she's our 7th guest from B&I Business Networking International that meets on Thursdays at Events Off 5th at 8 o'clock in the morning. And how long have you been in B&I? Do you know?
4 years.
4 years. Yeah,
I joined almost immediately.
The whole time. So we're both still figuring out what we're going on. We're puppies in the industry, as we say. And so you came in mortgages. It was still fun. It's always been tough. It's a lot tougher industry than people realize doing mortgages. Most people either assume they're looking on a website or going to a bank to get a mortgage, but you'll learn an actual mortgage office. That's all you'll do.
Yes, we are a mortgage bank. So there's a little bit of a misnomer in this area that they think that we're a broker. And brokers, they don't fund with their own money, but Gumtree actually funds with their own money. So we're a mortgage bank in the sense that all we do is fund mortgages. We can't do checking accounts and auto loans and things like that, but mortgages, we got you covered.
Well, the thing I like about Gumtree, other than you, and I guess Pepper Potts is the other, but she's okay. Pepper Potts is the legal name of their agent over in Starkville. is that y'all can touch the owner. Like I say, I like to deal with small business, because when people call and complain, I can't help you if you're with Chase Bank or if you're with Veterans United. At 5 o'clock on Friday, I know that you were in the ice cream aisle at Kroger, or the salad aisle at Kroger. It doesn't matter. But I know where to find you if I need to choke you.
Yes.
I've never had to get you and choke you, but I know where the different people are. Jimmy McPherson's at the Boy Scout hut. Like, different bankers are at different places. I can find you. Like, I know you're in Rotary. I know your kid's at Heritage or whatever. That's what I like about doing business locally. Here, like, your owner doesn't live here, but correct me if
They're
I'm
in
wrong.
Tupelo.
Yeah, in Tupelo. So,
Yeah.
like, you can talk to him. If
Yes.
a situation, which has happened, gets bad enough, you can be like, all right, this is what 16 section Columbus land is. This. You can talk to him. Where do y'all have offices? Because it's a little awkward about where it is, but tell them everybody.
Yeah,
where y'all at.
so we Gumtree started 20 plus years ago in Tupelo from two best friends that grew up together, Kenneth McNeil and Jim Shirley. And they have then branched out to New Albany, Oxford, Tupelo. Obviously, like I said, started in Tupelo, New Albany, Oxford, Starkville, Columbus, and then oddly Bozeman, Montana.
Of course, which is the natural thing. I'm fairly sure that there's like a Abner's Wings in those same 5 cities in Bozeman, Montana. Did they accidentally sign something in a drunken stupor on vacation? Or how
I
did they
wish
end
the
up
story went that way. I need to make up a story like
Yeah.
that. One of our owners was just going to kind of retire and decided to move to Montana for half of the year. And when he got there, he said, there's no way I can retire. There's too much business to be had here. And it was just fate or God wink or whatever you want to say. But they opened up the Bozeman office just before the Yellowstone premiere on TV opened. And so then his business has boomed.
That's awesome.
Yeah, it was great.
No,
Good
that's
timing for
incredible.
him.
Yeah, well, it gives you all support too to have more money coming in, more people,
Sure.
more investment. The more loans you see,
Yes.
the better you do with it. So, so you started. Had you ever done anything in the mortgages or banking business before?
No, not really. With the person that you call Pepper Potts, her real name is Rachel, by the way.
Oh, really? I didn't know that. That's news for everybody.
Yeah.
Rachel, you said.
Rachel, yes. Yeah, starts with an R, not a P. She met with me. Actually, B&I is who introduced us. And she met with me and she said that I have the personality that I can do this. She can teach me the rules. And the rest would have to be something that I perform with. And so that's what she saw in me, something that I guess nobody else saw. And she's trained me to do what I do. And I feel like we do it very well.
Well, it's part of the business, and I honestly, I got to say, I think that's part of real estate and mortgages. Why it attracts so many women, because there's a skill set of patience, of being polite, and then being tough and having to deal with stress.
True.
I have been in restaurant business and other businesses and never seen the stress that's in real estate and mortgage. It is unbelievable. You can do everything, not just right, everything perfectly, everything exceptional, and still have a deal fall apart and still get blamed for stuff and for no mistake that anybody's done. Like, a good example right now is the United States government is shut down. And day by day, especially in Mississippi, more and more people are waiting to close loans that wanted to use USDA loans. So explain, as the number 2 USDA lender or officer, in the country.
In the country, we
Yeah.
are the number 2 in the country for USDA loans
Yes,
as a whole.
and that's not something to sneeze at. Like, the USDA loan, some people don't know better in other markets, but it's functionally 100% loan for people to buy a house, as long as their income's under a certain level and their credit score is decent and the house is decent. It's a widely used tool in our area. You know, if you move to New York City, you're not going to use a USDA loan. If you're in San Diego or something, but there's a lot of areas of the country where you car. So for y'all to be
we're number
2
one in
in
the state.
Yeah,
Number 2 in the nation.
Number 2 in the nation. Mississippi, we only have 4 or 5 million people, and so you're going up against states with 30 and 40 million people, where 5 million people would be eligible for the USDA loan. They just aren't getting it done the way y'all are getting it done.
That's
Explain to me, spend a couple minutes on what a USDA loan is, how people qualify it, where the house, and then talk about how we've had 3 since we've known each other, shutdowns, and how they affect the whole process of it, but it's mainly the end.
Sure. So with USDA, the biggest thing is not only qualifying the individual that's going to be on the application, but it's a whole household. And so, let's talk about you and your wife. Just because you may be the only person on the loan, I have to actually look at what Desiree may make. And even your kids working, I have to look at their income. So it's a household income limit. And so that right there alone kind of bumfuzzles people, and they don't want to do anything more than that, because how do you prove, what you said one of your daughters makes at Zachary's? And so there's just some extra paperwork, but because of that, as long as you don't mind providing the extra paperwork, to me, I love doing them because it's no money out of pocket for you. And if you have a great realtor as yourself that can work in closing costs from the seller, then people can buy houses with absolutely no money out of pocket.
Yeah. I've had people even get the credit for the appraisal back.
Yeah, or the earnest money or anything.
I've told people it's $500 earnest money, $600 appraisal, and sometimes a $75 application fee. But I've had people, I've had sellers waive the earnest money. I've had people get refunds on the appraisal and spend nothing to get a functional house. Not a 60. You can do it with $60,000 houses, but they might not pass the loan. The loan does have, if it's a USDA backed loan, so tell them the difference between a USDA direct loan, which I love the people there, but I don't encourage people to do that because the USDA backed loan is much simpler and streamlined.
Yes, so there's USDA direct, which is like you're talking about. You would actually call down to the Jackson office and talk to a different person every time you pick up the phone and call. Or there's USDA backed, where it's called guaranteed, and that's what we do. And so it's still backed by the same government USDA organization. It's just we cut out some of the red tape. We don't have to have as many appraisals or inspections that the USDA direct would have, and we're going to close the loan much faster. Yeah. I've heard horror stories where if you go USDA direct, it could take 6 months to get a house closed.
Yeah, and it's not always a nightmare. I've had a few that went fine, but they definitely seem to be more strict when the appraiser comes to inspection on the house. And USDA loans, if people aren't familiar with this, they're just like FHA loans in our business, where they want the house to be decent.
Yes.
Like dead average would be a good phrase. So the roof's got to have at least 5 to 7 years of life on it. The air conditioner has to work. The water heater's got to be functional. Electrical panel can't be a horrible, outdated electrical panel.
Right?
Yeah, or decent. It doesn't necessarily, it can be fuses even, but it's got to be functional and working. So, and then, can it be fuses with USDA?
No,
I'm saying that. FHA,
yeah.
FHA can, USDA. That's the only real difference. No missing flooring, no rotted wood, no flaking paint, no broken windows. And so realtors in our market, let's say I would speculate, I think the national average of FHA and USDA loans, and VA, which we usually refer to as government-backed loans, hovers around 11% of the market. In our non-luxury segment, so under $500,000, that's about probably 40 to 50% of our stuff in Lowndes County. And so our realtors here in Lowndes County and West Point, even in Starkville, are pretty used to, you go to list a house, you tell them, you're going to have to fix that rotted wood, you can't fix that flaking paint, you're missing some flooring there, that window's cracked. It comes up, so we're used to it. Other markets, they're not, so there's a fear of it. There's a fear of using these loans because they're like, oh. And in other places, they may think they're poor people loans, and I'm like, number one, we don't care. Number two, it's our houses are affordable, and sure enough, especially with VA and FHA loans, people are using these to buy $300,000-$400,000 houses.
Oh, for sure.
Every day.
Yes. So another thing with USDA is they're going to limit your debt to income ratio a little bit, because it's not. There is the stigma of it's a poor person loan, but that is not true. It's just to try to help someone get into their first home that has not saved a lot of money yet. And so they want to tighten down on the debt to income ratios, because if you don't have a lot of money in hand saved up, then, we got 100% of the liability of taking that mortgage on and potentially something breaking and you not being able to fix it. So the debt to income ratio does get a little bit tighter with that as well, but we do it so often and so well, it's not a big deal.
Yeah, not a problem. So can you explain right now, with the government being shut down, what is the challenge while it's shut down and once they get back in business with USDA?
Can we use some of those bad words that you talked about earlier?
Yes, we can.
No. The government being shut down is very confusing to first-time home buyers, because I have actually a young family that calls me every day, and they keep asking me, am I opened back up? And I'm like, I've been at work. It's not me. It's the government. Call your congressman. So the fact that USDA is backing these loans, that means that we have to have someone physically at the USDA office that will go and stamp this as approved. And the day that the USDA government, or just the government in general, shut down, we had loans that were submitted to their office, and they're just sitting there waiting for someone to come back to work.
It shut down on a Tuesday. They would have closed Wednesday.
Yeah.
It was right then.
Yeah. And so now they're just sitting there now 30 days later, and there's no end in sight yet. And so that's the frustrating part. And they look to us, and then there are other people that go, well, maybe we should switch loan types. Well, you can if you qualify for that, But the reason that you wanted to do USDA is because you didn't have any money in the first place. So
Yeah, and then now you have the compounding factors of, some USDA people are on the SNAP program and all this other stuff, but we were just talking about health insurance premiums.
That's
So
right.
I'm a normal person, self-employed person with health insurance. It's going up $475 a month. I have multiple friends I spoke to yesterday who are $300 and $400 a person going up.
It's crazy.
Well, that's money you're spending every month on things, and it can disqualify you from having a loan. So if you're in a USDA loan and this thing goes on to December and your actual check in January for your insurance premium goes up $300, you might not be qualified for the house anymore.
Or the home insurance.
Yeah,
the home insurance is really going up. It's taking a big hit right now, too.
Yeah.
And that can throw people out of that debt-to-income ratio that we talked about.
Now, that's been a big thing. Home insurance the last 2 years in Mississippi has just been insane. And they're working on some statutory changes to it. Like I'm like, take the roof off of mine. Or I asked, some other states, not many, have these staggered deductions, meaning like you have a deductible. So you have a deductible for your house, usually just like your car. You pay $3,000 if your house burns down. Well, that's great, or $5,000.
Right.
And the higher you go, the more your payment goes down, but not by much.
Right.
So the argument now is like, well, can we make it? The roof is the biggest issue for most home insurers. The roof's got to be good because they don't want to replace it for no reason. So they're arguing now that other states have where I can have a $3,000 deductible on the house, but a $10,000 one on the roof. The insurance companies love it because that's half of even the worst roof, and
Sure.
that way if a hailstorm comes through, but the bigger problem is the mortgage companies want to make sure that roof is good because they're buying the house with you, and if they have to foreclose on you, then
That's
what are
right.
you going to do about the roof? And in bigger markets like Atlanta, people are replacing 8 and 9 year old roofs as part of a closing, just getting a deal done.
Wow.
So, not fun.
No, it's not. And, it's scary about what is even to come. And, the unknown is what always is what strikes fear in people.
Well, I didn't really have a grasp. Like, we knew, and I've spoken with some of our nationally elected officials in the last couple of weeks, and I was like, are y'all going to, it's like they don't think the Democrats are going to cave on health care. I'm like, well, right now, if you do it and they cave on health care, the same amount of people, for me, who are affected by the government shutdown. So, like, PACCAR is furloughing people because of the tariffs. Air Force Base has a couple hundred civilians who aren't working. There's other people you don't even think of. The USDA, guess what else the USDA does, folks? It approves and writes approves and distributes grants for Mississippi State, Mississippi University for Women, and other people monthly. And Mississippi State right now doesn't have a lot of money and then can't pay people. And after another month, they get furloughed and they get the money and they can't spend anything. They go behind on bills. And once they get a month behind on bills, they may not be late paying their credit card, but they don't have more money to put a down payment. They can't buy a house. They're not going to the restaurants. They're not doing this. It's trickle up and down. And so
That's
my
right.
argument to say Trent Kelly, the congressman, would be, well, if y'all shut it down and cave on health care, and then 20% of people in Mississippi are going to have a $400 or $500 a month increase in cost, the same amount of people can't do anything. So, like, if you leave it shut down, I'm losing 20% of my clients. If you open it back up but do that, we're losing 20% of our clients.
That's right.
And, Mississippi, unfortunately, is about 25% of the people live at or near the poverty line, and 25% overlapping of those people work at some level for the government. It may be a sheriff or 911 officer, or it may be Army Corps of Engineers. And so when you have that big of a factor and they're tightening up money, we're starting to see the effects this year, kind of, as I say, for Christmas, which is why I need the government shutdown to end, because I don't know how many loans you have. My guess is there's about 20, 25 in the market right now that are either waiting to start a loan or have one going that are waiting for the
Well, I
USDA.
currently have 4 sitting at USDA on their desks waiting for them to come back. But I actually have a USDA employee that wanted to do a refinance since the interest rates have started coming down. And we can't do her refinance until she goes back to work.
Yeah.
So there's lots of different
people
reasons.
don't think of all that, and I talked to the people at Sunflower, and they're like, man, if the SNAP benefits, the first 2 weeks in November, their busiest time of year, and so there's a lot of things that are unique to the South or Mississippi that people don't understand how much of effect. As I mention to people all the time, the Air Force Base has a $500 million economic impact on this. Well, if 10% of their employees are at home, that's a pretty big hit every month from not having.
I didn't realize the number.
Yeah, plus they're not issuing as many orders as they were issuing before.
That's right.
And they were already behind. So we're seeing all these lulls and stuff where we may be on Facebook going, yay, shut it down, blah, blah, blah. And then, like, all of a sudden, I'm like, well, it's been a month. Like, it's personally affecting
That's right.
me. And like I said, my bills just went up $475 a month, and I got to do something.
That's right.
So a tough part about that, but let's talk about the good part. Overall, you're based in Columbus. We all do stuff, obviously, throughout the Golden Triangle and Mississippi and Bozeman, Montana.
And Alabama.
Yep, in Alabama and Bozeman, Montana. Our market in Columbus last year was up almost 10%. This year it's going to be up 3 or 4 in Columbus. Caledonia and New Hope have slowed down a little. Part of that is the biggest challenge everybody has right now, stepping up in house.
That's right.
Talk about that, about a person in New Hope who had a $220,000 house who would normally, after 5 years, migrate to $300,000. What's the biggest challenge with them?
So the biggest challenge is that the interest rates have not come down enough. But it's a catch-22, as with everything. If the interest rates come down, then the housing cost is just going to go up. And the difference between a 6.125% rate and a 5.99% rate, which is, I hear people all the time, well, if we just go down to the fives, we'll buy. You're talking about a $20 per month difference. It's not big. And so I tell people, I try to explain to them, if it fits into your budget, go ahead and do it, because we can always refinance you later, whereas that price for the house is locked in. And then if things turn around and you can end up stepping up and you get more money for the sale of your home than you had originally anticipated, there's lots of things to do with that money. I encourage people to pay off other debt more so than even putting a big down payment. And here's why. You talk about an interest rate of even just 6%. If your car interest rate's at 8%, or you have credit card bills at 20 and 30%, it's smarter to pay off those debts at a higher rate than it is to save a little bit of money on your 6% interest rate.
Yeah, and if I say in real estate, you've probably heard me say it multiple times. If the public perception of the interest rate starts with a 5, not is a 5, the market will go kind of crazy. It's getting close to there, but there's too many other distractions and factors going on in the world, like we just spoke of.
Yes.
Even though you can't do it, but if the president or somebody else artificially put it down to a 4.9 or a 5, I think property values would go up across the board and across the United States 8 to 10% that day.
Oh, sure.
That day. And so, which offsets, like you said, so much of it. I'm a bigger fan, and I'm a realtor, but if people buy the house, our average house in our market's $275,000. A refi in a house like that, $2,500? Is that right? Yeah, maybe less.
Yeah.
I used to say $1,800,
We try to roll all those fees into your loan, too, so that you don't have any out-of-pocket expenses. But yes.
Yeah, $1,800 to $2,500, which is close to, right now, the payment on that house. But
that's exactly right.
So, and the theory used to be if the interest rate drops 1% on a $300,000 house, it's worth refinancing. Really, right now, the higher the interest rate, the less that number has to be. So if the interest rate was 10% and dropped to 9.6, probably worth refinancing.
True.
On a scale, of what you want to do. So, but it's tough. And the bigger obstacle than that, other than everything going on, is probably education. Is that I can't tell you how many people I've met who waited 3 years to buy a house because they didn't have 20% down. And I go,
yes.
You don't need 20% down. The two most important things they need to know is that I can show any house listed by any realtor, and that
and a for sale by owner,
and you don't need 20% down, which is shocking to some people because it's just part of the narrative of buying a house, and it's a responsible thing to do sometimes.
Yes, that's right.
But we use that I use it for, so there's assumable loans, which is somebody has a loan at a really good interest rate, but there's a essentially amount of time on that. So like if somebody's got a suitable VA loan that's at 2.5%, which sounds wonderful, and it is wonderful. Well, if they have it at 2.5%, it's from 6 years ago, which means that average house has increased in value $100,000 because it's probably a $300,000 house. Well, you're like, I can get that assumable loan if I had $100,000 in cash, which some people have. God bless them. I don't have it, but if they have it, well, the higher that $50,000, $100,000 goes, the question goes is, why don't I just put this money in the stock market and make 7 to 8%? So the higher the number goes, the less valuable it is. And that's the same thing like you were saying about credit card debt. Well, if you've got $50,000 in credit card debt, why are you worried about your house payment?
That's right.
Like anybody, and the average person has 20 to 30, they shouldn't be. If the average family has $20,000, that's buying a house. 18 to 20 grand of, a retail debt of credit card debt that they're paying 12 to 20% or 25% right now, and then they're going, well, I don't want to miss 1% of my house, and you're like, you're already missing it.
Oh yes, and that's what it's hard to explain to people, and it's hard. And I get frustrated when they don't understand. Like you just said, they will in a knee-jerk moment drop. Heck, you go buy a car right now and it's $100,000, and interest rates are 8, 10, whatever your credit score is, percentage. You're looking at a credit card or an automobile loan at 10, 20%, but yet you're going to squabble over a 5 or 6% interest rate. And it does make a difference because the price is more usually on a house, but it still ends up being a better payment.
And again, I have to give some context to our worldwide listeners and people. I have friends in New Orleans and Atlanta listening and agents listening. We have really decent. Right now, there's a 1,400 square foot house in Sherwood Forest that's $230,000 with a brand new roof, 5-year-old air conditioning, good floors, good everything. Not that super dated. It's $230,000. Good in perfectly fine house. So other people are thinking of the $500,000-$600,000. I understand the discussion there. Here, $500,000-$600,000 people. Generally, the buyers have $100,000 down. They're 2 working professionals. That's sort of our almost luxury market. Whereas people in Atlanta are like, well, you can't buy a house for under $450,000. So context is important in that we're talking about people who are driving $80,000 cars who can live in $200,000 houses. Because the cars aren't relative. The cars cost the same everywhere.
That's true.
We have really decent houses in great neighborhoods here for $300,000. So we're not having $600,000, $700,000, $800,000 discussions.
That's true.
So,
well, back to your point about down payment, not only is there a better way sometimes to use that money, but we already talked about the USDA loan, which is no money down. VA is no money down. FHA requires 3.5% minimum. And a conventional loan, if you're a first-time home buyer, is only 3%. And people say, oh, well, I used to own a home 10 years ago. If you have not owned land or anything in 3 years, you're now a first-time home buyer again. And so then if you have owned a home, the minimum is 5%. So, yeah, you're not talking about much money sometimes.
Yeah.
Yeah.
It's something else. So if somebody wants to get ready to buy a house, now the first thing you should do is call Leslie Mackey, Gumtree Mortgage, or Colin Krieger at RE/MAX Partners Real Estate, Starkville, Columbus, West Point, in Bozeman, Montana for you, in case you're going to Bozeman.
Yes.
Other than calling you the first thing, if they're just listening to this and it's Thanksgiving Day and they don't know what to do, first thing to do is don't borrow any more money before you talk to a mortgage person.
For sure, please.
I tell people, I was like, don't change jobs, don't get married or divorce, and don't, whatever you do, finance a couch in a yellow pickup truck on the way to closing. Billy from Steens, Mississippi. I didn't say his last name on the podcast I have before. Just don't do it. But that's during the process. So when somebody calls you on the phone, they're like, ring, ring, ring. I want to buy a house. I don't have 20% down. I'm so sad. You go, what's the first thing you do?
I tell them that the 20% down should not be a worry at the moment. Let's take a look at their application. I like to do a credit pull. We can do a hard credit pull, which actually affects their score a little bit. Or we can do a soft credit pull, which actually does not affect their score at all. We can do that just for a preliminary basis to see where they are with things and what may or may not need some attention before they get started. And then once we look at their full scenario, we talk about the different loan programs that they are qualified for. And then we start talking about, if they need a down payment, where they can come from, things like that.
Most people, I like to tell most people that I think this is a good average for half of our buyers in town. They're usually $3,000 or $4,000 and 18 months away from qualifying for a loan.
That's a good rule of thumb.
Yeah, there's a lot of people with 580 credit scores who've fallen behind on some stuff but don't realize that it's been a while or whatever. Can you talk, too, about a lot of people go through divorces, go through bankruptcies or foreclosures, and just never try again, or they wait 10 years and they come to you and they come to me and they're like, yeah, I've went through a bankruptcy. Do you know the current time limits on those sort of things? Because foreclosure is not nearly as bad. I don't want people to get foreclosed on or pick that option.
Right.
But you haven't ruined your life forever.
No. Oddly enough, and I don't really like doing these, but if you are in a Chapter 13 bankruptcy and have been for a year, you can buy a house. Now, it's not fun and it's not easy, but it's doable. But after a Chapter 13, because you have made some repayments, it's a sooner time that they will allow you to go back in and buying a house. And depending on the loan type, it's either 1 to 3 years. Chapter 7 is going to be closer to 5, just because you elected not to pay the bills back, and so they give you a little more of a time period for that.
It's still not that bad.
It's not, no. And as long as you have made strides to keeping things current after the chapter, whichever one it is after the bankruptcy, then it's definitely very easy at that point.
In a foreclosure, 3 years? Is that correct?
Oh,
It's usually part of a bankruptcy.
yes, I was going to say it depends, and there's different rules based on different scenarios. But yes, I would say general rule of thumb is about 3 years.
Yeah, because most people think they go through some traumatic thing like a divorce or whatever, bankruptcy, and they're like, my life's over, I'll never own a house again.
Well, the reason that these things happen is big too. You say 3 years, but if you just decide to stop paying your bills, that's not a good explanation, reason why. Nobody wants to loan you money again.
Yeah.
But if you've got one of these life-changing events like a divorce or a loss of job, then those are valid reasons that, can do things.
The general credit industry, people, I've talked to bankruptcy attorneys before, and they're like, it's such a hard thing to say the truth out loud and all this, but bankruptcy in and of itself is accepting, or Chapter 13, is accepting responsibility for what you've done. You're saying it's out of control,
That's
I can't
right.
do anything, I'd like to get out of it. Creditors would much rather see that than I walked away.
That's right.
And we
I
have
agree.
people who don't understand when they're walking away that I've gone to and be like, you owe 70 grand on this house, it's worth 200, let me sell it. And you're like, no, I'm too far behind. Blah. I'm like, no, please. Like,
I know.
I've had people walk away from up to $100,000 in equity just because they didn't know.
That's the sad thing, and people listen to other people that are close to them that don't know, they're not in the market, and they get bad advice. And so it's very important it sounds horrible, but some people will call me and say, I need an FHA loan. And I'll say, why? And they say, because my dad had one. Well, your dad may have needed that, but that doesn't mean you do. And so it's really important for people to get the advice that they need from the professionals that do this day in and day out, and not just a family member that tends to complain because they had a bad or good experience about something,
Yeah. Well, I've had two clients. Well, one's a client, one wasn't. But who had their house within the 15 days before the house was sold on the courthouse steps. One of them did a short sale and one made money. Like, I saw their name on the thing there. I recognized them. I'm like, what's going on, man? Like, well, I got divorced, ran out of thing. I'm like, how much do you owe? And like 110. I'm like, your house is worth like 160. And they're like, blah, blah, blah. And they worked out a deal with an investor, got 130. They made 15 grand. And selling it versus the complete foreclosure is way better.
Oh, yes.
And then same situation where I had somebody who owed like 150 and they were getting foreclosed on at 150. They owed, the house wasn't worth much more than they owed. I'm like, I was like, this
But it's
bank,
still to
but
get
it
out.
was a local bank, and I'm like, I called the person in the bank. It was about to be in, they call it a REO, real estate owned property. I'm like, will you do a short sale at 140? I got an investor that'll buy it at 140. I can't be involved in it. And they're like, well, we're going to lose 10 grand. I'm like, if y'all looked at the house and he like did the evaluation, and he's like, we're going to foreclose at 150 and have to sell it at 135 and not make any money. And they took it. So he had a short sale on his thing instead of a foreclosure, which again, it's way better because it's accepting it. The bank will at least see, like, especially a local bank will be like, well, he tried.
That's right. I agree.
And, burying your head in the sand doesn't help.
No, and we'll do a credit pool, especially the soft credit pool, and we do them for free. So if you ever have someone that you're like, I just don't know what it looks like, have them call me or send them my link to the online application. They can get to that without even talking to me first.
All right, we said we were going to say some bad words on here because nobody edits this podcast. I am going to say what could be perceived as a bad word. So like Zillow is a bad word for realtors. How about Credit Karma? Tell me a little bit about that Credit Karma score.
So Credit Karma is never right. The score itself is not right, I should say. I do encourage people to download Credit Karma after I give them what their real credit score is. Credit Karma likes to try to tell you what it could be if you'll do these other things that they actually don't tell you about. So they give you an inflated score. So if you have a 500 credit score on Credit Karma, the chances of you being a 500 in real life is not there. But I can then tell you what your real score is and how to get it up to what they're predicting it or more, because obviously the higher the score, the better the interest rate. What I do like Credit Karma for is it shows you your current debt, and it will tell you if you have something in collections or if you've fallen behind or anything like that. And that way you kind of keep a better idea of what you have, spending wise. Bringing up something that you may not have thought about, especially going into the holidays, are all these affirm payments. And I call them girlfriend loans that they're named weird girl names like Cleopatra and all these odd names. But affirm debt, those are not just layaways. Those are actual, you are putting this on your credit report, and you are making interest payments on these. Even if it says no interest, they take a big hit to your credit score. So all of these affirmed debts, we have to actually count them toward your debt to income ratio.
This is financing a couch, right?
Yeah,
It's
or
like
anything. You
Lincoln
can go
Financial,
on.
that sort of
No,
stuff.
Amazon will even do it. You can
Oh,
buy.
I've seen, I mean, I know air conditioning. They ask me all the time if I want to finance a toilet stopper I bought or whatever.
Oh, yeah, you can spend $50 and they'll stretch it over 4 payments, which sounds great if you need those stretched out over 4 payments. But if you're trying to buy a house or think you might buy a house, please stop doing all those affirmed payments.
The one I can think of, like, would be a good, like, and our friend Andrew Benton does great air conditioning work. To finance an air conditioner in the middle of winter, I get that's, and that's not a firm. I think it's some
No,
other
that's
kind
a
of,
real legit
but like that's
debt.
like you got to. I was like, that's amazing. Or Russell Poole, who does water remediation and remodels. You know, if you're doing a remodel and you're finding, yeah, it's a little sketchy.
That's
but he's
right.
like, I can find if you have a water damage, and he goes, I go to people's houses all the time who have $8,000-$10,000 water issues, and we can finance it. To me, like, that's amazing.
It is.
For a while, they didn't let you finance roofs. They're starting to do it again. Like, it's not the best option, but if your roof's bad,
Oh, but I'm not even talking. Those are bigger ticket
Yeah.
items. I'm talking about, $100 Christmas present. Don't finance those. If you can't afford it, don't buy it. It's not like my mom now.
yeah, I know. And I'm actually right now thinking of cutting my kids off for Christmas. You know, they've had it too good for too long.
That's right.
And I'm going to tell
Shake
them
things up a little bit.
Auntie Leslie said Katie needs to come wash the car again. So,
Please. Yes, I
yeah,
need it.
They've got her trapped at MSMS, and they're not supposed to work, which is a good thing. She'll be back at work this fall. So.
Okay, good. She does a great job.
You got to get through that first semester. Katie Krieger
Yes.
washes cars. Katie Krieger's Car Cleaning Incorporated. What's the most exciting thing going on in the real estate business in the mortgage business right now is a positive? Are there new things coming down the track? Less regulation? Everything's rosy and wonderful, or is it?
Oh, everything's perfect. As long as you don't look behind the curtain.
Yeah.
No, really and truly, we lived in a very blessed area. I mean, we tend to have more business than the country. And, when the numbers go across CNN or Fox News or whatever media you watch, things tend to be very negative. And so I definitely like to bring the positive back to it. And we are very busy still in the Golden Triangle. For good reason. We have some, like you mentioned, good houses at good prices. And the interest rates are not bad. Had a VA purchase the other day before the Fed cut the rate at a 4.5%. I have not seen a 4% in a long time. Of course, after the Fed cuts the rate, people think that the Fed cutting the rate actually helps mortgage rates, and it does not. It does the opposite. It makes mortgage rates go up. For short term, we already had our rates kind of built into being better.
Yeah.
And then when the Fed cut the rate, they bounced up a little bit, but they should soften again. And so rates really, truly are not the issue. We need people to stop being scared of the rate and call and just see what a price would be on a house and then go from there.
Well, especially it affects the interesting part is like when the rest of the country's booming, we're doing really good, and when it's slow, we're doing good. The rest there's areas, a lot of areas of the country, even similar to Columbus and Golden Triangle, that are crashed in the last couple of years. Just doing Florida. So Florida has more listings than the rest of the country. Florida's in trouble.
So I'm telling you, we live in a great area. I love, Columbus. Don't get me wrong, everybody has its pros and cons, but overall, I like to keep the positive spin on things, and things are very good, and they need to continue being good.
Well, yeah, and I forgot what I was going on the other point, but
Sorry.
The cost of living is going up everywhere. Our insurance is going to go up more. I hope every version of insurance is going to go up more. A dollar is not what it used to be. So part of it is the understanding inflation, because my generation, I'll be 50 years old in a couple of weeks. Send your gifts to 803 Fifth Avenue North. Shower me with stuff. So I'll be 50 years old, but I'm just starting to truly grasp, because I don't go to the grocery store all that often, or I stay on the outside of it, that a 12-pack of Coke costs $7.
It's insane.
You know what I mean? So there's things like that, and we don't understand. And then when that comes to a house or a house payment, you're like, oh, my house, the house is $350,000. You're like, it's not that much. I see it every day, so I don't perceive it as being that big of an issue. Cars are the easiest way to tell, because cars cost the same new cars cost the same almost everywhere. And
it's crazy.
Yeah,
how much a car costs.
I know several people with 2 cars that are their payments more than their house. So.
Oh, I see it all the time. It's nuts. They can't afford a $150,000 house, but they have a house or car payment that's $1,600 per month, and that puts them out of that budget. That goes back to putting your money towards a car, not necessarily the house down payment.
I mean, I don't know. I love my people at SDI and ADI, but there's some nice trucks out there. And a lot of those guys are making 80, 100 grand a year, you know.
That's right.
They got the nice car, and then they drive, like, a lot of them say, I drive home to a trailer, you know.
Yeah.
And, you know, and can you help with people buying a mobile home?
Unfortunately, no, because that's chattel property. It's not an actual deed. And so because a mortgage has to have a deed tied to it, I cannot do a mobile home.
We do sell a decent amount of area. Good rule of thumb is it's got to be in good shape. It's much easier if it's less than 10 years old, and between $50,000 and $100,000. Under $50,000 becomes a challenge.
Yes.
It's just tough, and it's no matter how much you like it, I'm looking at it like a car. And that's how it is.
That's how it is. That's right. It's titled like a car.
The older it gets, the worse it gets, you know, that sort of thing. But that some people think it's their only choice. Now, living in New Hope or Caledonia, it may be to find something under $150,000. But you start going over to Ethelsville and Vernon and get up in Amory and Aberdeen and West Point, there's a lot of spots that you can get pretty good houses for $150,000, $180,000.
I agree.
There are functional, livable houses. I have 2 under contract at $125,000 right now that are perfectly fine. Like,
yeah.
my you know, when people ask me about a neighborhood and they're trying to like ask me questions like, is it safe, this, I'm like, listen, I only got 3 standards. There's like, you know, would I let my mom there, would I let my daughter live there, and would I let my brother live there, you know? And so the brother's the low end. Like, he could take a shot or two. You know what I mean? But like, you know, I'd let Eric live there, you know. It's not bad. But generally speaking, you know, in Columbus or West Point, under $150,000, your house will never get broken. I mean, $150,000 or more, your house is never going to get broken into. It may be like my house downtown where you can't leave a weed whacker in the front yard or anything. You know, add about 20-25% to that if you go to Starkville. Starkville has a little more crossover crime than Columbus, meaning that like people go to the good neighborhoods to break in, yeah, which is surprising. But other than that,
it is surprising.
Yeah, it's just part of it.
Yeah.
Know, so
no, well, I would. One more positive: Gumtree Mortgage does not deny anybody at all. We will tell you that you may not be ready right now, but then we'll give you the tools of how to prepare to be ready. So that's a positive that we like to add on our.
Well, and time flies too. Much like us knowing each other for 4 years,
I know.
People move quickly. You know what I mean? Like time flies. Like you'll just be like, I can't buy a house now, and you'll sign a year lease on a rental, and then a year later you're like, whoa, I'm ready.
I know.
Especially if you have a goal or if you put them on payment plans for something, it usually isn't. You're not talking about 5-10 years. Whereas I can tell you with my kiddos, you know, 5 years flies by. It does.
The older we get, the faster it seems to go.
Again, I'm turning 50 next week. Send all bourbon to 803.
Bourbon. I love how you're specific now about what to send.
Yeah, I'm getting the worst it gets. I might be saying Percocets by the end of the show. Sorry, I didn't mean that, officer. So I'm trying to think of some other mortgage-related stuff. We can ask life-related stuff, but I know you travel quite a bit. Where are you going, Wyoming or Montana?
Well, last I went to Montana because my dad lives in Montana, and he's already getting snow, so I won't be visiting him for a while. So I don't want to deal with the snow. But right now, my car's in the shop talking about an expensive car that, you know, needs to be working, and it's not. It's making me mad.
And we have a former client helping you with that.
Yes. I love Mr. Barry. He's helping me a lot, actually. So.
Yeah, and that's one of the interesting parts people don't think about real estate and mortgage stuff is how you make friends in it, not just in the business, but with clients. And there's some people who are challenging and don't have the records and can't get stuff to you. And then you would sometimes look at the surface at the most successful people you know, and they may be self-employed, which...
fun.
So you hear that noise she just made, folks? I know if you're watching TV. So Colin is self-employed. And I have a very elaborate tax return. It's ethical. It's legal. It's wonderful for me. And I have rental properties, so I have a lot of write-offs and stuff. But I'd be close to not affording one of these $80,000, or on paper, not getting one of these $80,000 cars because of my elaborate tax return. Which means, so you want to talk about what some self-employed people, especially self-employed people with no employees, may have to do, because they probably need to talk to a mortgage person a lot
sooner.
Earlier. Yeah,
yes.
And you know the mistake a lot of them make is because they are making a lot of money and they have their elaborate tax return. They're feeling confident. They're like, I'm doing great.
Yep.
And then they're the ones quite often that call me and say, I got this house. I want to buy it today. Let's go. And then they call and they're like, well, your tax return said you made $31,000, Colin. Like, you can't buy anything.
That's right.
Yeah.
Won't.
Yeah.
Yes, so for tax returns for self-employed people, I need a history of 2 years minimum. The longer, the better, but I have to look at the most recent 2 years. And that Schedule C is the golden ticket. You don't want to, I like to use just round number examples for people. If you state that you have gotten and have a 1099 for $100,000, but yet you have written off $90,000, and that means that I can use $10,000 divided by 12. That does not get you much in the housing world. And so looking at the Schedule C is very important because there are things that we can add back that you don't think about. And so talking to me or anybody else at Gumtree that we're very versed in self-employed people, we can help you walk through that before, because January's coming up. So now would be a great time for all of you self-employed people to give us a call and say, hey, look at this tax return before you go file in January in case you need some tweaking for January's filing.
Yes.
Yeah.
For people who would file in January, which are amazing people.
If you want to buy a house, you need to.
Yeah, I'm ready by June usually, but I'm also not buying a house. But
True.
Yeah, no, the road is littered with self-employed people who just love this house, and they probably think they make $200,000 a year, but they put on paper that they make 50. And I'm not talking to every single one of you guys that own construction equipment, but that's exactly who I'm talking to. Is every self-employed construction guy who makes $0 on paper and gets shocked when they can't buy a house or buy a cool house, and usually have to wait a year to get their stuff in order. So,
but that's why you and I work well together, because you'll call me, like you said, on a Friday afternoon. That's how we ended up with said Mr. Berry.
Yeah.
You know, on Friday at 5 o'clock, you knew exactly where I was and could help you out. But in that same vein, with self-employed people, you can call me and say, hey, take a look at this, and we not actually, put any other pen to paper or anything. Just look at your tax returns.
Yeah,
for
like
now.
if I ever want to save my money and buy a lake house, I know I have to plan
That's
a year
right.
and a half ago. Now, if I bought it on a commercial loan, which is a whole other thing, you can do it tomorrow. But,
That's right.
But there's a lot of benefits to keeping stuff in your personal name, too. So.
Yes. Very true.
So if somebody has what they perceive as a bad credit score, can they call you?
Oh, yes. I love credit repair, and I don't charge anything for it. Like I said, we'll pull a soft credit pull, take a look at things, and set them up on a plan and tell them almost exactly how long it's going to take to fix it. I love doing that.
Well, that's what the people think, and they may think this about me, but like I have had plenty of calls where I don't want to bother you. It's just people listening outside of Mississippi are going to be shocked. I don't want to call you. It's only a $60,000 house, or an $80,000 house, or $120,000. Some people think $200,000 isn't worth my time.
No.
It is quite often so much more rewarding to get through the process of somebody where you got to fix a little credit and get a little money from an uncle and do the deal. They're so much happier with the house, and
Yes.
you're more proud for things you work for anyway.
That's true.
And when people put in the work, and I'm not look, I am not bashing you. If you're pulling up with a bag of cash, I'm your man. But if you need help too, there's vast majority of I'm going to do probably 60 real estate deals this year. A lot of them on the seller side, but most of the people aren't putting 20% down.
No.
I've had years where I've only had 2 or 3 clients getting that number.
At the end of October, I have closed 73 loans for this year, and I would venture a guess that 5 or 6 of them put 20% down is all.
Yeah.
Yeah.
Well, explain PMI to people then, because not all of those, just because you different loans have PMI, private mortgage insurance, but talk about which ones do, which ones don't.
USDA has PMI for the life of the loan. VA does not have it at all. FHA has it for the life of the loan unless you're able to put 10% down. Remember, I said the minimum is 3.5.
Yeah.
If you can put 10% down, it lasts the first 11 years, no matter what. On a conventional loan, and that's where that 20% misnomer came from. If you are able to put 20% down, your PMI goes away. And that's whether that's on day 1 or year 15. It doesn't matter. Whenever that 20% mark gets hit, the PMI goes away. However, PMI is an interest rate just like your regular interest rate for your loan. So I have people that have a 700 credit score, and their PMI is $23 per month. So would you not rather save your $100,000 of down payment and spend the $23 per month? So, yeah.
And much like the refinance we talked about, once you get 20% equity in the house, that's the time to refinance, and then you're done with it again there too.
Yes, PMI is scary. It's been, and there have been times where it's upwards of $100 per month, but currently it's not. Based on a good credit score, it's very minimal.
Yeah, because they know you're going to keep the house or pay it back or move.
That's right.
The time has gone up. The average family United States on dead average houses, like low-end houses and high-end houses, people stay in them longer. But when you're talking about dead average in our market, 275, people are staying in the houses 7 years, and it's crawling up right now because of the interest rate. So the New Hope, Mississippi example we're talking about is client, letter J, client buys a house for $220,000 in New Hope 3 years ago. They call me back to buy step up, a natural, bigger house, nicer house, newer house is $330,000, $100,000 difference. Well, because of the interest rate, their payment may have doubled, and they're not going to do it. And a lot of people look at houses. Once they talk to the mortgage company, they talk about insurance going up, taxes going up. They can't double their payment.
That's true.
And
Yes.
that's part of the thing where they're waiting. So there's a whole crop of people in the United States who have a house that are staying at that are way too small. They don't like it, but they just can't pull the trigger and move out. Or we got used to as a country for 30, 35 years to that pretty drastic step-ups. Like I'm giving the 200 to 320 example, but there's markets where my first house cost 200, the second cost 400, the third cost 6, and that happened in 15 years.
Right.
And the lower the interest rate, the easier that is to move quickly. You're like, oh, you don't even think about it. My house is at a 2.1 interest rate. I am never moving from my house. My great-great-grandkids will live in my house where my payment is more taxes and insurance than it is interest,
Yeah, but people talk about wanting that lower interest rate again, but unless we're in another pandemic or at war, we won't see them.
Yeah, we've talked about it. We don't really see. I was in college when we said the interest rate would never be below 4. I think a large percentage of the people in the know think 5 is the lowest it could possibly functionally be. Because it's not supposed to be that low and the economy be good. It's just
True.
not,
Yep.
because it affects everything.
Helps it, yes. We need it to be a little higher to pay off debt and tamper down inflation and things like that, but it all seems to be on the rise anyway, so.
Yep. Nope.
Yep.
I need to eat at home every day. Well, go to support all my friends at their restaurants. I just won't be there with you. Because my freaking health insurance.
Bring you gift cards on your 50th birthday. And
Yeah, did you know it was my 50th birthday?
I did not. It's the first I've heard of it.
Yes, I actually bring some Tylenol with codeine to my house with the bourbon and the cookies. We always like cookies.
What are the cookies laced with again?
I don't know. November 18th, everybody. It's Mickey Mouse's birthday and my birthday. I think this will probably come out after that. So,
Okay.
Any other messages you want to go out to your legions of fans today, other than visit B&I Thursday at Events Off 5th at 8 a.m.?
Just go to the Gumtree Mortgage website, click on the Columbus, Mississippi office, and then you can go online and fill out an application, and I can take a look at it. And we almost don't even have to talk just to get a soft credit pull done and take a look at your finances and see what you qualify for. Don't be scared.
Anywhere in Mississippi, anywhere in Alabama, anywhere in all of
State
Montana.
of Montana.
And of course, for all of our Montana listeners, I don't even know the area code up there, 671-662-4242. Ignore that. So, all right.
Yep.
Well, I loved having
Thank
you on the
you.
show today.
It's been fun.
All right. I'll see you soon.
Thank you.
Thanks for coming.
Bye.
Hey guys, thanks for listening to the podcast. My name is Colin Krieger and my day job is real estate. If you're looking to buy or sell, I'd love to talk to you. Or if you just want to sit and talk real estate in a no pressure situation, I'd love to help you. I work with RE/MAX Partners in Starkville, Columbus, and West Point, Mississippi. I can help you find an agent anywhere in Mississippi or anywhere in the country. Just reach out to our office at 662-327-7705 or find me anywhere when you type in 662-329-SOLD.